Hey guys, my name is Justin. In today's video, I am going to tell you my Super Bowl stock picks for 2020. What I did was I went through the starting rosters of the Kansas City Chiefs and the San Francisco 49ers, and I assigned a stock to each player. I then took each portfolios of those stocks, and you can see up here, if we go to my research tab and my pies, you can see I actually made a portfolio of the stocks for the Chiefs and the 49ers, and at the end of this video, I will compare which stock portfolio wins. So let's go ahead and get into the video. The first two players that I will go ahead and compare are the quarterbacks. And the quarterbacks are players that, they make big plays. They're well known. Everyone knows who they are. Their teams put a lot of money into paying them well because they are the ones who are the winners. It is very hard to win a football game, especially a Super Bowl, if your quarterback is bad. So these stocks are stocks in my portfolio that I put a lot of money into. These are my biggest stocks, I guess, the heavy hitters, the ones that are the showy stocks that everyone knows about. So first up we have Patrick Mahomes versus Jimmy Garoppolo. So for Patrick Mahomes, I went ahead and selected Shopify. Shopify is the largest holding in my portfolio. You can see down here it is at 39.5% of my entire portfolio. Shopify is a great stock. I think that a lot of people know what it is. It's been a consistent winner over the past 2 years, and I think it will continue to be a winner 10, 20, 30 years into the future. So Shopify for Patrick Mahomes. Next, for Jimmy Garoppolo, I selected Adobe. And Adobe is a large software company, and it is in the software as a service business. And as you can see, I have 22% of my portfolio, currently 18.9% of my portfolio in software as a service companies. And Adobe is my largest position inside of this section of my pie, this section of my portfolio. I think the products on Adobe's site, their video editing, their Photoshop is huge. All of those creative products, I think that they're going to be able to continue to grow market share moving forward. And that is because as we move more into the internet age and more people create things to put online, there's more marketing, more people are working for themselves. And Shopify is the same way. So really Shopify and Adobe are two ways that I think people are going to take advantage of the internet moving forward. More people will be quitting their jobs or just using the internet to make more money to supplement their income. And so Shopify and Adobe, I think, are two great stocks that will continue to be winners for a long time. And that's why I selected them at the QB position. Okay, next, moving on, we have the running backs. Now, running backs, every now and then a running back is gonna have a huge run. But for the most of the game, the majority of the game, I should say, they're just gonna have little 3 yards, 4 yards, 5 yards. They might only average 3 or 4 yards a carry, but they're going to be consistent performers. And these are stocks that are going to keep going up slowly but surely. They're also going to be heavy hitters that can take a lot of negative attention. The players are Damien Williams for the Chiefs and Raheem Mostert for the 49ers. So for the Chiefs, I have selected Tesla. This is a great stock because it has just been so much negative news has been put on Tesla, and it just, you can't slow it down. You can say whatever you want to say about Tesla, but it has just kept going up, and this is a great stock for the running back position. If you add Tesla to your portfolio, I really think that it's going to be a consistent winner, and no matter what people say about the stock, no matter what the negative news is, no matter how banged up the stock gets, it's going to continue moving forward. So Tesla for the Chiefs, that is my pick at the running back position. Next we have, for the 49ers, AMD. This is another stock that really has gotten a lot of negative attention, and rightly so. It's a small company in the semiconductor space group of stocks, but they have a great CEO and they're kind of underdogs, so that's kind of why they have a lot of negative attention. They're really trying to steal market share from Intel and Nvidia and a lot of legacy companies that are larger, but there's been a lot of short interest in AMD, a lot of negative attention, people saying, oh, it can't keep going up, there's no way, it's, negative attention all around on AMD, and it just continues to perform. So AMD and Tesla are my picks at running back. Okay, next we have wide receivers. Now, wide receivers are, smaller in size, quicker. They have the potential to make big plays. Now, a wide receiver might drop the ball or might only have like a 5-yard catch, but the wide receiver position does have the ability to have, 50, 60-yard receptions and score touchdowns very quickly if they can catch the ball. So these are stocks that are smaller and have the potential for massive gains in the future. So the players at wide receiver, for the Chiefs, we got Tyreek Hill, super fast guy, and Deebo Samuel for the 49ers. And the stocks I've picked for the Chiefs are Paycom. And Paycom is a little surprising. Probably you're surprised that I've picked Paycom, but let me go ahead and show you in my portfolio. If we go to my software as a service stocks and we look at let's look at the last year. And then let's go sort them by gain. Paycom is my top performer out of 15, 16 stocks that I have in this portfolio, up 68.5% over the past year. And if we look at the most recent quarter, then we see Paycom still wins at 49.76%. And if we look at the last month, it's not winning. I have some of these smaller companies, but it's still up there at 14%. So Paycom, I think over the past 5 years is up almost 1,500%. It is still a small company, and it has the potential for massive rewards. I read an article recently where they said that it is going to be potentially soon added to the S&P 500. And something that's really interesting about Paycom is it's small. I think it's only about $15 billion market cap. And we can check that really quick. Let me check that actually. So if we go here, and then, 18.6 billion, has a PDE ratio of 113.5, which means that it's profitable and has been profitable for a long time. And that's actually one of the criteria that you need to get into the S&P 500 is you need to show profitability for a certain amount of time. So Paycom is a great small company, not well known, still plenty of room to run, and that's why I picked it for the Chiefs. Okay. Moving on to the 49ers at the wide receiver position, I picked Roku. And Roku is a pretty risky stock. I mean, this would be like a wide receiver that does not have very good hands, but is very fast. So they can beat anyone down the field, but it's basically 50-50 whether they're going to catch the ball or not. So Roku, if we look at what it has done over the past 2 years, I mean, this is pretty crazy. Roku stock over the past year is up 155%, but at one point it was up 258% in a year. And Roku, I think, it could go either way, but there's a really good investment thesis with Roku, and that is that they are at the center of the streaming wars. They work with the TV manufacturers to get their hardware into the TVs, and now they're kind of transitioning into a software company where they can allow you to download any of the streaming services, and now they're starting to run ads, and there's a lot of positive things happening with Roku. When Roku first came out, I thought that it was just simply a hardware company, and I wasn't very interested in it. But now with the investment thesis moving towards a software company and making money off of ads, and they're really positioning themselves to take advantage of all the streaming wars and the shift from traditional television to streaming. And I think that Roku is a great stock that has the potential to blow up in the future. Moving on, we are going to go to the tight end position. Tight ends are usually taller, they're usually bigger, so we're going to say these are large companies that maybe aren't as agile or fast. They're not going to grow as fast as a small company, but they are guaranteed to be consistent performers, and they're capable of doing many things. They can run the ball, they can catch the ball, and they can block for you. There's a lot of different things a tight end can do. So these are companies that are going to grow regardless of the economic conditions. They're going to be very resilient They are going to just be consistent performers, but they're larger companies and they might not grow as quickly as some of the smaller companies. So for the Chiefs and the 49ers, the two players are Travis Kelce for the Chiefs and George Kittle for the 49ers. Both of these guys have been playing really good, by the way. I just have to mention that. I mean, Travis Kelce has been a huge target for Patrick Mahomes this year. And so both of these guys are going to be key players to watch in the Super Bowl, and I think they're going to have a huge impact on the game. Tight end Travis Kelce for the Chiefs, I picked Microsoft, and I think Microsoft is a great company. They are huge. They are over $1 trillion now, but they're really positioned themselves well to take advantage of the cloud and that that transition that we're experiencing into the cloud. Everything's moving to the cloud. And Microsoft just got a huge deal with the Pentagon for a big cloud project they're working on. It was something like a $10 billion project. I can look it up really quick. Let's see. Microsoft defense contract. Let's see. Yes, the JEDI, the Joint Enterprise Defense Infrastructure cloud contract worth up to $10 billion. Okay, so I was right. $10 billion contract with the government. Microsoft is a huge company with a big moat, and it still has a lot of room for growth. So that's who I picked for the Chiefs. For George Kittle and the 49ers, I picked Apple. Apple is the largest company in the world, and it's still exhibiting huge growth potential. So in 2019, Apple actually went up over 100%, which is crazy. It added about $500 billion to its market cap in 1 year, which is like adding the size of Facebook to your company. I mean, Facebook is like a $500 billion company. So it added $500 billion in 2019 to its size. It went up 100%, and that is crazy. So it is a large company, but it's doing a lot of things right. Smartphone growth is taking back off, and so that's why I picked it for the tight end position. So next, I didn't really want to do defense, but I think it's important to have some defensive stocks in your portfolio, and I only have really one defensive stock in my portfolio. But let's go ahead and get into it. So for the defense, for the Chiefs, I picked safety Tyrann Mathieu, and for the 49ers, I picked defensive end Nick Bosa. What we're looking for here is stocks that don't correlate closely with the market. And there's a very important measure that we look at, and that's called beta, when we're trying to decide how closely a stock correlates to the S&P 500. That's what we mean when we say the market. So beta of 1 means that the stock matches the movement of the S&P 500. It's like a 1-for-1 deal. S&P 500 goes up, your stock is likely to go up. S&P 500 goes down, your stock is likely to go down. A beta of 2 means that it is your stock that you've picked in comparison to the S&P 500 is likely to move twice as much. A beta of 0 means they do not correlate. The S&P 500 is up, your stock might be up or down. And a beta of -1 means that they move opposite. So what did I pick? For the Chiefs, I picked NEE, Next Era Energy. This is the largest electric utility company in the US with a market cap of around $150 billion, but it still has gone up 148% over 5 years, and it only has a beta of 0.07. So it still has very high growth for a company of its size, especially a utility company, and it only has a 0.07 beta, which means it's not going to correlate with the S&P 500. And I've seen this in my portfolio when the S&P 500 has been down, or when a lot of my stocks have been down, Next Era Energy has actually been up. So it's a very small part of my portfolio. You can see it here in my large cap dividend stocks. And you can actually see, if we look over the last month, NEE has actually beat all my other large cap dividend stocks. All right, so for the 49ers, we have defensive end Nick Bosa, and I picked American Water. I don't have American Water in this portfolio, but I do have it in my Roth IRA portfolio as a top growth stock. It has a beta of 0.08 and a 5-year growth rate of 153%. So American Water, it's not going to correlate closely with the S&P 500, but it's still up 153% over 5 years, which is pretty good. All right, moving on, we have the kickers. I can't leave the kickers out of this. We got to include them. For the Chiefs, we have Harrison Butker, and with the 49ers, we have Robbie Gould. Or Gould. I'm not sure how you say that, actually. So these are stocks that pay a high dividend and also have high growth. So, you know, the kickers come in and they might get an extra point here or 3 points there. They're not going to go off scoring a ton, but every little bit helps to win a game. And in your portfolio, if you can have some high growth dividend stocks helping you out, giving you a dividend every year, that's going to be great and it's not going to hurt your portfolio. So for the Chiefs, I picked AVGO, also known as Broadcom. Broadcom is paying right now over a 4% dividend, which is crazy. And over 5 years, they're up close to 200%. And they have a market cap over 100 billion. So they're a large company with a high growth rate, and they pay a ridiculously high, in my opinion, dividend. Now, the only downside is they are a semiconductor stock. They are in the tech sector, so they're gonna be more volatile than your average stock. But hey, this channel is all about teaching you how to beat the market and how to be a growth investor, so you shouldn't worry about volatility. I'm not worried about volatility, and you shouldn't be either. For the 49ers, I picked TSM, which is Taiwan Semiconductor Company, and similar to AVGO, they pay over a 3% dividend. They have a 5-year growth rate that is 150% plus, and they are like a $270 billion company. So they're, you know, a large company, pay a good dividend, and have a high growth rate. Again, the downside is they are in the semiconductor sector and they are tech stock, and so they're going to be more volatile. There are my Super Bowl stock picks for 2020. That means that we have 6 stocks for the Chiefs and we have 6 stocks for the 49ers. The 6 for the Chiefs are Shopify, Tesla, Paycom, Microsoft, NextEra Energy, and Broadcom. And for the 49ers, we have Adobe, AMD, Roku, Apple, American Water, and Taiwan Semiconductor. So what I did was I went into the research tab and I went to my pies and I clicked this create new pie. And I added the stocks to each of these pies. Now it doesn't add them to my portfolio and I don't put any money in them. You see I can click here, add to my portfolio. Right now they're just using them as research. But what's really cool is it will take all the returns of all the stocks in each of these pies and tell me over the past year, how much did they go up? It's also going to tell me an average dividend, and I can also see a simulated stock graph so I can see what the volatility was, what was the biggest drop. And here we go. Here are the results. For the Chiefs, we have a 1-year return of 88.28%, which is pretty good. That's close to 100% return in a year, which is really good for 6 stocks. A dividend yield of 1.184%, which is good. Over 1%, that's good in my book. You look at a lot of technology ETFs and they're not over 1%. And the biggest drop over the past year was negative 10.7%. That was the biggest drop you would have experienced if you held all these stocks over the past year. So not bad. But how did the 49ers do? So the 49ers had a 1-year return of 78.76%. Then they had a dividend yield of 0.926%. And they had a maximum drop of 16.3%. So that means in the past year, they dropped 16.3%. So the results are clear, guys. The Chiefs won this stock picking process, whatever you want to call this, whatever I just did. The Chiefs won this, which means the Chiefs are going to win the Super Bowl tomorrow. There you go. All right, guys, well, thank you for watching my video. I hope you guys learned a lot from this video, and I hope you got some good investment ideas. My point with this channel, the whole goal of this channel is to provide value to you and help you beat the market and pick high growth stocks that you can stick with for long periods of time. Because, guys, that's how you're really going to beat the market, is by picking these high growth stocks and continuing to put money in them regardless of the price, regardless of what happens, and just hold through all the market volatility. You want to hold them because that's how you're going to get the biggest return. If you want to watch more of my videos, this is episode 3, but you can watch my previous episodes, and I come out with new episodes every week that talk about investing and help you beat the market and learn how to turn a small amount of money into a large amount of money. That's what I'm trying to do with this portfolio, guys. I am trying to continually put money in and grow this portfolio very rapidly. So if you want to keep updated with my progress, go ahead and subscribe. Go ahead and drop a comment below with any questions you might have, and like this video, guys. Thank you.